Hello beautiful people, it's your boy Desi Money. Once more I welcome you to my YouTube channel. If you are new here, please hit the subscribe button so you don't miss out on new exciting content. As I mentioned in my last video, today I shall be defining some of the major terms used in the Forex market. I promise to keep this video short and precise, with the sole intention of making you to understand as best as I can. Okay, here is what we shall be discussing about today. We shall be starting with currency pairs. We shall be talking about pips. We will move on to lot sizes, not forgetting stop loss and take profit, of course. Then we shall also talk about leverage, and we will be ending with spread. Without any waste of time, let's move on to currency pairs. If you remember, in my last video I did say the forex market is being traded in pairs, and by that I mean you have to be able to bring two currencies together for a trade to happen. We have more than 100 or even 1,000 pairs available at your disposal, but today we shall be mentioning just the 7 most traded pairs in the forex market. The list starts with the Euro USD. We also have the Pound USD or GBP USD. We have equally Aussie USD, which is for the Australian dollar. We have NZD USD, that is the New Zealand dollar. We have USD CAD for the Canadian dollar. We have USD CHF, which is the Swiss franc. And finally, we have USD JPY, and that is the Japanese yen. As I said, this is the 7 pairs which is most traded, and you have several others, and you can go ahead and you research, and maybe you'll find one which is good. You can analyze it better, and you may feel comfortable trading it. So the next point on our list was PEEP, and PEEP just happens to be the smallest change in value between two currencies. To better explain this, I will bring up our favorite pair, which is the Euro USD. At the moment it's valued at 1.4970. Any change in this amount is what we refer to as PEEP. So let's say this market drops down from 1.4970 to 1.4960. That represents a 10 pips movement. Okay, so it doesn't matter if the market is going down or up. So long as the value changes, we have a movement, and that can either be a profit or a loss. That is it about pips. We will be moving on to the next. So next up, we are talking about lot or lot sizes, which basically refers to the number of units of a currency you are willing to buy or sell at a particular time. And we have 3 different types of lot sizes or lots, which are the standard lot, the mini lot, and the micro lot, as we would be seeing shortly. For a standard lot, it represents 100,000 units of a country's currency, and it is represented by 1.00. One mini lot is 10,000 units of a country's currency. 0.10 is the representation, and for one micro lot, it gives us 1,000 units of a country's currency, and it's represented by 0.01. So before talking about lot, we already made mention of PEEP, and there is one other thing that we would be talking about now, which happens to be the PEEP value. And to come about the value of a PEEP, we have to put together the lot size and the PEEP. For a standard lot, a 1 PEEP movement is valued at $10. For a mini lot, it is valued at $1, and for a micro lot, it is valued at 10 cents. Let's say in a trading day, you make 50 pips for yourself. That would translate to $500 if you were trading a standard lot, $50 if you were trading a mini lot, or $5 if you were trading a micro lot. Okay guys, so as already seen, it is very easy for you to make a few $100 or a few $1,000 on a trading day in the Forex market. But you should note that as easy as it is for you to make this amount of money, it is the same way you can lose it. Which brings us to this very important part of our conversation today, the stop loss and the take profit. Statistics has shown that in the Forex market, more than 80% of traders lose money. So if you have to be amongst the 20% that do make money from the market, you need to have a solid risk management system set in place. You know, in all my years of trading, whenever I come across a new trader, most of the time what you would hear them say is, I wish I can make maybe just $500 in a day. I'll be very happy if I am able to make just $200 in a day. You never actually hear anyone tell you, I hope I don't get to lose more than $100 in a day. I hope I don't get to lose maybe $50 in a day or more. And if I have to be honest with you, this is how a Forex trader's mindset should be. You should be more focused on how much you are willing to risk or lose in a particular day than the amount you intend to make if you want to be successful in this business. Let's take this to the graph so I can better illustrate what I am talking about, and so you might have a better understanding. If you look at the chart right here, the market is in an upward movement, and when we look at such a chart, we are hoping that the market would keep rising. Of course, this is in case of a buy position or long position. Let's say we have our entry price right here at the center. So we are looking forward for the market to keep going high because the chart looks bullish. So in such a case, we would have our entry price above, we will have our take profit above the entry price. But then what if the market doesn't go in our desired direction and reverses against us? What then happens? Without a stop loss, the market keeps going down infinitely until your account is blown. You're being taken out, you're being sent a margin call or something. In order to avoid that, we have to set a stop loss in place. The stop loss comes in here to limit our losses per trade, such that if the market doesn't go in our desired direction, we should not lose so much money in the market. We have a particular percentage which we have already set aside to assume as loss in case of a reversal. That is what is known as a stop loss. And it is a common knowledge amongst Forex traders to not lose or risk more than 2% of your trading capital per trade. If the chart were to be reversed and we are talking of a sell market, we would still have a similar thing, but then the stop loss now would be above your entry price, because now we are looking forward to the market going down, which is our take profit now would be below and our stop loss would be above the entry price. I hope you understand this concept and you take it very seriously. If you want to be successful, you have to be serious with your risk management. So that is that for stop loss and take profit. Let's move on to the next part of this video. Okay, so next on our list is leverage. And leverage is basically a loan given to you by your broker to enable you open larger position sizes than you would do with your regular account balance. Let's take, for example, you have an account balance of $1,000 and you take a leverage of 1:100. When multiplied with your account balance, you realize that now you have the possibility of getting larger units per currency. One thing you should notice, the leverage is a double-edged sword. This is so because when it gives you the possibility of trading with a larger account size, that is, it gives you an increased possibility of making profits. It's the same way your losses are also being multiplied. So you should be very smart about choosing leverage and how or when to actually use them. So finally, we are on the last segment of this video, which is talking about spread. And spread is basically the difference between the bid and the ask price, and it is being measured in pip. And since we already spoke about pip and pip values, I will just have to illustrate this differently so you can understand better. So of course we will take our favorite currency pair, Euro USD, and now we have the bid price set at 1.4675. We have the ask price set at 1.4678. So if you look closely, you realize the difference there. It's 3 pips. So the spread here is 3 pips. If you had to execute this trade, the broker stands to gain 3 pips. It doesn't matter if you win the trade or you lose the trade, so long as you hit that execute button, the broker gains 3 pips. For the broker, they just need you to have money in your account. Yeah, and execute trades, of course. It doesn't matter if you win the trade, it doesn't matter if you lose the trade, they will still make money from the spread. That has been it for this video. I hope it has been insightful, I hope it has been educative, and I hope you learned a thing or two. If there is anything that you did not understand, please drop it in the comment section and I would get back to you as soon as I can. If you like this video, please don't forget to hit the like button and also to subscribe to my channel for more upcoming content. Until next time, I wish you a happy trading life. Peace.